Hey everyone, and welcome back to Talk Tickers. We're going to be diving deep into Albemarle's Q4 2024 earnings call today.
Yeah, just dropped.
They just dropped their results.
Yeah, hot off the press.
And it's shaping up to be a pretty fascinating story.
Definitely fascinating. Albemarle, as you know, is a big name in lithium, that magic ingredient for EV batteries and all things energy transition. So their performance is a bit of a bellwether for the whole sector.
All right, so let's set the scene. Give us the high-level overview. How did Albemarle actually do this quarter and for the full year?
Well, on the surface, things look pretty solid. They pulled in $1.2 billion in net sales for Q4 with adjusted EBITDA of $251 million. Not bad at all. And zooming out to the full year, they wrapped up 2024 with $5.4 billion in sales and a cool $1.1 billion in EBITDA. So they're hitting their targets, which is impressive given what's been happening in the lithium market lately.
Okay, yeah, that's what I wanted to get into. We've all seen the headlines about lithium prices cooling off. Did Albemarle address this? What's their take on where things are headed?
They did, and this is where it gets really intriguing. They're actually giving their 2025 outlook based on 3 different lithium price scenarios. Scenario 1, they're looking at lithium carbonate equivalent, LCE, at $9 per kilogram, which is basically where prices ended up in 2024, scenario 2. A range of $12 to $15 per kilogram, the average for the first half of last year. And then scenario 3, a bit more optimistic at $20 per kilogram, which was the average back in Q4 of 2023.
Whoa, a three-pronged approach. That's a pretty wide range. It definitely shows you how much uncertainty there is right now.
Yeah.
What does this tell us about how Albemarle is thinking about the future? Are they hedging their bets or just genuinely unsure?
It's probably a bit of both. On one hand, they're acknowledging the volatility and preparing for different possibilities. But on the other hand, offering these scenarios could also be a way to manage expectations and show investors they're thinking ahead. What's really interesting is that even under their lowest price scenario, that $9 per kilogram LCE, Albemarle is still expecting positive adjusted EBITDA.
So they're saying they can stay profitable even if the lithium market continues to soften. That's pretty significant. How are they planning to pull that off?
Well, a big part of their strategy is laser focus on efficiency and cost reduction. They're actually slashing capital expenditures by more than half for 2025, down to $700 to $800 million from a whopping $1.7 billion they spent in 2024.
Okay, that's a bold move. What does that cost-cutting actually look like in practice? Where are they making those reductions?
They're getting strategic with their global operations. One major change is that they're putting their Chengdu lithium conversion facility in China into care and maintenance, basically hitting pause on production there for now.
Interesting. Is that a temporary measure or a sign of something more concerning about the Chinese market?
It's hard to say for sure, but it definitely raises questions. Is this just a way to streamline operations, or is it reaction to slowing demand in China? We'll need to keep an eye on that. They're also making some shifts at their Kinzue plant, also in China, moving some capacity from hydroxide to carbonate production.
Okay, so they're tweaking their production mix. What's driving that decision?
Likely a response to changes in demand. It seems there's stronger demand for carbonate right now. This move could be Albemarle's way of aligning their output with what the market actually wants.
Makes sense. So cost-cutting production shifts.
Yeah.
What else is Albemarle doing to navigate this potentially choppy period?
Well, cash is king in uncertain times, and Albemarle is making sure they've got plenty of it. Get this. They secured a $350 million customer prepayment for spodumene and lithium salts deliveries over the next 5 years.
Wow, $350 million up front. That's huge. What does that tell us about Albemarle's position in the market?
It's definitely a power move. It suggests they have strong relationships with their customers and a good degree of market power. It's a massive vote of confidence, especially in a shaky market. You don't see that kind of deal every day.
You're right about that. So even though there are a lot of questions about the short term, Albemarle seems pretty optimistic about the long-term prospects of lithium.
Right. The whole world is going electric, and Albemarle is betting big on that trend. Global EV sales grew by 25% in 2024, and they're expecting that growth to keep accelerating. Plus, there's the whole grid storage boom, which is already soaking up a significant chunk of lithium demand.
It's wild how fast the energy landscape is changing. Okay, I'm really curious to dig deeper into this regional breakdown of the EV market. What are the key trends Albemarle highlighted?
Well, China is still the 800-pound gorilla, accounting for a staggering 65% of global EV demand last year. They saw a 37% year-over-year growth fueled by government subsidies and an increasingly diverse range of EV models.
Wow, 65%. China is truly in a league of its own. What about other regions? What did Albemarle have to say about Europe and North America?
Europe actually had the weakest demand in 2024, mainly due to reduced subsidies and some broader economic challenges. But there's hope that potential price cuts on EVs and stricter emissions targets could jumpstart growth in 2025. North America had a pretty decent year with EV sales growing by 14%. The US is seeing positive momentum thanks to more affordable models and greater availability.
Okay, so a mixed bag globally, but the overall trend is still pointing towards EV growth. So far, it sounds like Albemarle's handling the lithium market roller coaster pretty well.
They are. They're being proactive, making strategic moves, and keeping a close eye on the long game. Now, let's be clear. We are not offering financial advice here.
Of course not.
Yeah.
This is just our deep dive into Albemarle's earnings call. We're here to break down the information and offer some insights to not tell you what to do with your money.
Exactly. Do your own research, folks. But that being said, let's have some fun and explore a potential trade idea, purely hypothetical, of course.
Ooh, I like where this is going. Hit me with it.
All right, so remember how Albemarle is shifting some of their production at Kinzue from hydroxide to carbonate?
Yeah, they're betting on carbonate being the hot ticket, right?
Right. What if we take that as a signal that maybe, just maybe, carbonate is about to be in even higher demand than anyone's anticipating?
Okay, I'm intrigued. Where are you going with this?
Don't get me wrong. I'm not saying run out and buy lithium carbonate futures or anything.
Definitely not financial advice. But what if we start looking at companies that are heavily exposed to carbonate production? Could this shift by Albemarle give them an edge? Again, just a thought experiment here.
Exactly. The point is, sometimes the most valuable insights come from paying attention to the subtle moves companies make. Albemarle's shift towards carbonate might seem like a small detail, but it could have ripple effects throughout the market.
Great point. It's all about connecting those dots and seeing the bigger picture.
Hmm.
All right, that wraps up part one of our deep dive into Albemarle's Q4 2024 earnings call. We'll be back in part two to break down some of the financial details and dig even deeper into their strategy.
See you then.
Welcome back to Talk Tickers. We're continuing our deep dive into Albemarle's Q4 2024 earnings call.
Yeah, picking up where we left off.
We talked about those three lithium price scenarios Albemarle laid out for their 2025 guidance. Remember, they're looking at $9, $12 to $15, and $20 per kilogram for LCE.
Right, and you know what's really interesting is they expect positive adjusted EBITDA even in their lowest price scenario of $9 per kilogram.
That's pretty impressive.
Yeah.
What's driving that projection, even with a potential drop in lithium prices?
Well, a big part of it is their proactive approach to cost management and operational efficiency. They've been streamlining their processes, and it's showing in these projections.
Okay, but profitability is one thing. What about cash flow? What stood out to you in that regard?
Oh, their cash flow management is remarkable. We already talked about that huge $350 million customer prepayment. But on top of that, they're also targeting an operating cash flow conversion rate of over 80% in 2025.
80%? That's incredible.
Yeah.
How are they achieving that kind of conversion rate in this environment?
Well, it's a combination of factors. They're improving their working capital management, meaning they're becoming more efficient at managing their short-term assets and liabilities. And of course, they're reaping the benefits of their cost reductions and efficiency gains across their operations.
So it sounds like they're taking a multi-pronged approach to ensure their financial stability.
Absolutely. All of these efforts are part of their plan to reach break-even free cash flow as early as this year.
Wow, that's ambitious considering the market volatility.
It is, but their actions demonstrate their commitment to achieving that goal. It's not just about making projections, it's about taking concrete steps to navigate this uncertainty.
Speaking of taking concrete steps, how does their balance sheet look? Do they have the financial flexibility to weather potential storms?
Their balance sheet remains strong. They finished Q4 with $2.8 billion in available liquidity, giving them a substantial buffer to maneuver.
That's reassuring to hear. So they're profitable even in a low-price scenario, managing cash flow expertly and boasting a solid balance sheet. It seems like Albemarle is in a surprisingly strong position despite the lithium market's fluctuations.
I agree. They're not just riding the wave, they're actively steering the ship through these choppy waters.
All right, let's shift gears a bit and discuss Albemarle's long-term strategy. They mentioned the EV market and grid storage, but where else do they see growth opportunities?
Despite short-term challenges, they remain bullish on lithium's long-term potential. They're continuing to invest in expanding their resource base, especially in Australia and Chile.
So they're doubling down on lithium.
Absolutely. They firmly believe that the demand for lithium will continue to rise, fueled by the growth of electric vehicles, grid storage, and other emerging applications.
It's a smart bet, considering the global push towards electrification. But what about their sustainability efforts? How does that fit into their long-term strategy?
Sustainability is a core principle for them. They're actively working to reduce their environmental impact, ensuring responsible sourcing practices, and supporting the communities where they operate.
That's great to hear. It's encouraging to see a company prioritize sustainability alongside profitability.
It demonstrates a forward-thinking approach. They understand that sustainable practices are not just ethically responsible, but also crucial for long-term business success.
Now, before we wrap up part 2, any final thoughts on Albemarle's overall positioning and strategy?
What stands out to me is their remarkable resilience amidst market volatility. They're not passively waiting for conditions to improve. They're actively shaping their future.
Indeed. They're taking charge, making strategic decisions, and demonstrating a commitment to long-term growth and sustainability. They're a company to watch, that's for sure.
Absolutely. In part 3, we'll delve deeper into some key takeaways and broader market trends that this earnings call has illuminated.
Sounds good. We'll see you there for the final part of our deep dive. Welcome back to Talk Tickers for the final part of our deep dive into Albemarle's Q4 2024 earnings call.
Yeah, we've covered a lot of ground.
We have from their financial performance to their strategic shifts in this evolving lithium market.
It is evolving, that's for sure.
Absolutely. And now it's time to kind of pull it all together. What are the key takeaways we can glean from this earnings call?
Well, I think the biggest takeaway for me is Albemarle's resilience in the face of a challenging market. They're not just staying afloat, they're strategically maneuvering to thrive.
Yeah, I agree. Their proactive approach really stood out. Instead of waiting for the market to turn around, they're taking control and making smart decisions.
Exactly. Their laser focus on efficiency, cost reduction, and generating strong cash flow. It allows them to take charge regardless of those lithium price fluctuations.
And even in a low-price environment, they're still projecting profitability and positive free cash flow.
Right. That speaks volumes about their ability to adapt and build a solid foundation that can weather those market ups and downs.
Their decision to shift production at Kinzue from hydroxide to carbonate is a prime example of their adaptability in action.
Absolutely. They're constantly analyzing the market and adjusting their operations to meet evolving demands. It's a real-time example of strategic agility.
They're not just reacting, they're anticipating and planning for the future.
And speaking of the future, their long-term outlook on lithium remains incredibly bullish. They're all in on lithium and believe demand will continue to surge.
Which makes sense given the unstoppable rise of electric vehicles, grid storage, and other lithium-dependent applications. Albemarle is positioning itself to be a major player in this long-term growth story.
And they're doing it sustainably. Their commitment to environmental and social responsibility is integral to their core strategy.
That's a crucial point. It's not just about profits, it's about building a business that is both profitable and sustainable for the long haul.
Right. This earnings call really does underscore the importance of adaptability and agility in today's rapidly changing world, especially in the energy sector.
It's not enough to just have a plan. You need to be able to change course when the situation demands it.
And Albemarle exemplifies this principle. They're not afraid to make tough decisions and shift their strategy when necessary.
So we've talked about Albemarle's strong performance, their adaptability, their long-term growth prospects, and their commitment to sustainability. Any final insights for our listeners before we wrap up?
Well, just to reiterate, I think this earnings call offers a valuable lesson for any business. The ability to adapt and respond to a dynamic market is crucial for success. And as always, remember, this is not financial advice.
Of course not. We're just offering information and insights, not investment recommendations. We encourage all our listeners to do their own research and make informed decisions.
Absolutely. That's what makes a great investor.
Well said. That wraps up our deep dive into Albemarle's Q4 2024 earnings call. Thanks for joining us on Talk Tickers.
Until next time.